great to be back in Sydney. This by far is one of my favorite cities, and every time I have the opportunity to come back, I do so. And I also wanted to say it's great to host the first FinanceConnect Down Under. I'm going to talk about 3 key topics, as Matt mentioned. Quickly give you some highlights of our 3rd annual FinanceConnect, which was held in New York. Then go into some of the research. And then lastly, leave you with a global case study of a client that's getting it right on our platform. So February 13th, this is what New York City looked like. And we had 350 financial marketers brave a blizzard and were sequestered for a day to discuss social media's impact on the customer. Now, the theme of the conference was the rise of the customer, as Matt mentioned. And what was amazing, obviously the content was inspiring, but it really showed the dedication that financial marketers have in really understanding social media and how it impacts their business. Trust came up in every single session. Now, and I actually have a quote from, because I wanted to make sure I got it right. So Paul Butcher, global head of digital communications at Citi, summed up the sentiment nicely. He said, trust comes not just from a single interaction, but the entire relationship with the customer. Brand is what you build between a past and future interaction. It's a matter of time, and it's a matter of integrity. Now, how many of you have seen Edelman's latest trust barometer? Well, the good news is that the financial service sector saw a 4 basis point increase over the past 5 years. The bad news is that we're still at the bottom of the barrel. However, the Australian businesses are leading the developed world, and you showcased an 11 basis point increase in just 1 year. So I think that the next Global FinanceConnect should be held here. We have a lot to learn from you as well. So in terms of the key themes that were discussed, I want to focus on 3 of them. The first is that authenticity, relevancy, and dialogue are essential components in building a sustainable relationship. The second is really around the importance of listening, taking the time and understanding the mindset and needs of your customers. And we're going to get into some of the tools that we've developed to help you do so. And the third is really around harnessing big data, tapping into internal and external data to deliver a more contextualized experience. So we actually did a couple of video cuts, and there's actually on our YouTube channel, you can see the entire New York conference. There's some really inspirational speakers. But I'd like to share 2 notable CEOs, Mohammed Al-Arian, who got a lot of press during this time because he resigned from PIMCO, and John Taft, the CEO of RBC Wealth Management.
So I would put up a post, and I would get incredibly insightful comments. And I would read through these comments and learn a ton of things. And they would link me to other things that I wasn't even aware of. And they would challenge me on, well, why didn't you approach it this way? Why didn't you approach it that way? And I realized, wow, this technology is allowing me to communicate much better than I've ever communicated before. That LinkedIn is allowing me to overcome barriers that would not have been overcome otherwise. And the result of that is I get this incredibly diverse perspective from people who are interested in the same thing I'm interested in. So that is why I've put up so many posts on LinkedIn. You know, as an economist, I believe reveal preference is the most important thing. Not what people say, but what actually people do.
What every CEO or every executive should be doing is learning by trying it, testing it, getting out there, seeing what happens, because I just find it experientially, it's a completely different world. The jury's still out as to how social media is going to affect my business, the wealth management business. I know it will, I don't know how, I don't know to what degree, but I know I better be, at the forefront of figuring that out. If you can be authentic, you can differentiate yourself. People will remember you, people will trust you. Trust is huge in our industry. So how do you be authentic is communicating through social media channels? Being interesting is part of it, and being intelligent, or trying to be, is part of it. Being interesting means being edgy without being over the line controversial, taking on a tough subject and bringing to bear on it a fresh perspective that enlightens and educates people who are reading or digesting your content. That's, I guess, the closest I've come to an amateur's formula for authenticity online. One of my operating premises is that going forward, businesses are not going to can't compete just on the basis of price, just on the basis of product or service quality. You have to compete on the basis of values and ideas, and your clients, prospects, and customers are going to look at you and say, does that firm's values, does their worldview align with mine? And only if that's the case are you going to get to a conversation about, would you like to buy my product? Mm-hmm. And by the way, this is what it costs.
So John actually, I think a week afterward, did a post where he talked about authenticity and sincerity. And that definitely is a key theme that's coming up. You see it a lot in terms of the press. And I just wanted to reinforce his definition. Authenticity is about being true to oneself. Sincerity is about connecting with others. And it's great to see that you have two CEOs in this region. You have Peter Sands from Standard Chartered Bank, who's taking on a tough subject. There's a lot of controversy around China's debt. And in his opinion, it's not signaling a crash. But there are other economists out there that might disagree. But he's being sincere and he's being authentic. So Matt had talked about Mike Smith, and I actually had the privilege of meeting him in Mountain View. And he talked about, I think it was almost a year ago, he talked about how he became a social media believer. And really, after his trip, the manifesto that he signed up for in really driving digital transformation. And it's great to see a year later the evolution of bluenotes.org that really stands for some of the topics that we discussed about being more transparent, more engaged, and more responsive. So really showing that commitment. So just touching upon harnessing big data. Big brands that are getting it right are turning information into insights. And we had the opportunity to have American Express with us. We had two leaders. Scott Rowan, who just left American Express, he talked about Open Forum's relaunch and how they're leveraging LinkedIn's API to authenticate and to drive the profile of that member experience. Audrey Henley, who's the general manager of Open, talked about really beyond just being an advocate and helping the community. They're really interested in understanding moments of truth before the transaction and how they've harnessed 16 months of data. That's over 40 million conversations, whittled that down to 47,000 conversations, really to understand the adjacencies to the purchase path. So mind you, not everybody is that sophisticated, but obviously they're really invested in understanding and leveraging social data. Walter and Ben are going to talk about Trendon and CMS, tools that we've launched to help you better understand what content's relevant to a financial advisor, to a retirement decision maker, to a CEO, and how do you measure the effectiveness of your content. So let's talk about high net worth investors and SMBs. Now, when I first joined LinkedIn, I think the biggest argument that I got was high net worth investors aren't leveraging social. So last year we conducted a global mass affluent study, and we revealed the results in Australia. This year we're revealing our high net worth study, which is 1.2 million Australian dollars in investable assets. That doesn't include property. Now, what we found was that 75% of high net worth investors are leveraging social media. Does this number surprise anybody in the room? Well, that's good. What was very interesting, and this is actually a global study, so for those of you, we're going to be releasing the global results where we looked at high net worth investors in 6 regions, and there's some really interesting differences. But what we're seeing is that even the uber affluent are leveraging social. Those numbers are still pretty significant numbers. Now, LinkedIn, here in Australia, LinkedIn has the highest concentration of high net worth investors. And thinking the context and trust that's engendered on our site, I guess it makes some sense. But what's really interesting is that 40% of those high net worth investors are not employed. So I know a lot of times we're thought of as a jobs platform. 40% of those who are not employed, or in general, what we're seeing is that they're turning to LinkedIn as a content platform, as an insights tool. That number is actually 60% in the US. Obviously, they have quite a bit of wealth. A lot of them are active traders. They have private equity. But they're really leveraging our platform, and then the uber affluent are even more engaged. They're interested and they're consuming financial content throughout the decision journey. 56% are actually reading reviews and recommendations. 52% are looking for breaking news, want to understand your company's perspective on market timely events. And 48% are actually searching for information on our platform and others. What's also interesting is that 60% of high net worth investors who are using social media have at least one, are leveraging it for one financial purpose. So as I mentioned, they're leveraging it to keep up to date on current trends. 47% are looking for information, so they're more in that consideration phase. What's interesting is 29% are actually reevaluating a financial decision, so some advice that their financial advisor may have given them. So really starting to see that bottom line ROI. The good news is that they're actively engaged and they're looking for information, and this provides an enormous opportunity for all of you here. Small and medium businesses are critical to this nation's GDP. They're critical to the global economy, and they're a big source of employment. In the US, and we just revealed this on February 13th, we were able to identify that there was $5.5 trillion of revenue that was generated from the SMB segment was impacted by social media. Now, we actually worked with Dun & Bradstreet to identify that. What we mean by, so obviously we're going to talk about the Australian marketplace, but I first want to get into the definition of SMBs. We surveyed, this is a global study as well, and we surveyed 240 SMBs, really honing in on small and medium, so those between 8 and 45 million in revenue, and upper medium, 45 million plus. We did filter out large enterprises, and we also filtered out, if you weren't a financial decision maker, we filtered them out of the survey. So what did we find? The good news, and this we saw in the US and Canada, is that SMBs are growing. 70% of them are actually showed a revenue increase year over year. 58% are actually saw an improvement in overall profitability. So obviously a very healthy economy. What's not surprising is that 81% are actually currently using social media, and 6% plan to. Now, this makes a lot of sense when you think that social media is helping them address their #1 business challenge, which is to find new customers. And 65% of SMBs said that they acquired new customers via social media. What I was particularly interested in designing this study was to understand social media's impact on the overall value chain. So as I just mentioned, we're seeing from a marketing standpoint, it's incredibly effective as an advertising tool. 79% said they saw it effective in delivering content, and obviously as a lead generation tool. But what was really interesting to me was that 75% were leveraging social media to source suppliers and partners. They were leveraging their social graph to vet people that were important, obviously, to their value chain. And that 73% are really tapping into social media as a knowledge center. So crowdsourced knowledge. They're tapping into groups. They're asking their social graph. So really, these businesses are able to compete today. In the past, they weren't able to compete against larger businesses. Now, actually, this is my favorite stat. When we did the study in the US and Canada, we were able to show the correlation between social media investment and revenue growth. We weren't able to show the causation. We didn't structure the questions properly. So when we rolled this out in other regions, we made sure, because my hypothesis was that it wasn't just correlated, that social media's investment was causing that revenue growth. And what we saw was that 58% of hypergrowth companies, these are companies that are growing faster from a revenue perspective than the overall index, were actually attributing their growth to their social media investment. For companies that were growing, that was close to 40%. So obviously, we're seeing more and more redirecting of dollars given this bottom line impact. So let's look at our business. Does social media, what role does it play in impacting their financial decision journey? We saw that 3 out of 4 SMBs are leveraging social to inform themselves somewhere in the decision path. In looking at the key types of uses, 43% are keeping up to date with trends. 32% are seeking advice. They're looking at recommendations. 21% are reevaluating a financial decision. Now, what was interesting, and I didn't share, was that I believe it was 36% of high net worth investors were actually SMBs. So obviously, you're seeing some correlation here in the back to pack. We saw that LinkedIn, obviously, was a medium where they were receptive to receiving this financial information. And of the 2/3 who actioned a response, 1/3 actually took action. They opened an account, they closed an account. So really, in terms of that bottom line ROI, we are really seeing it in the data. Now, obviously, from an attribution perspective, I think as an industry, we're all trying to prove that throughput. So I'd like to end with a client that we've been partnering with over the past 3 years. It's a global client, HSBC. And in talking to Amanda, her key goal is to be, they're really interested in the middle market businesses, internationally aspirant businesses. And her key goal is to move their relationship from just a transactional partner relationship to more to a strategic partner relationship. And so she's identified content as really the vehicle to differentiate HSBC. They have all this content, and they launched a site several years ago called HSBC Global Connections. So how do they reach these mid-market businesses? How do they tailor their content to be relevant in China, in India? So I'd like to share and end with a short video that we were able to film in New York, and then we'll open it up to questions.
My role at HSBC is really looking after the marketing for the business-to-business side of the company. What we needed to do was actually think of a way of start to build the brand by using something like content. And the way that we've done that is by building a site called Global Connections, where we've actually put a lot of content on there about doing business in multiple countries. We were really trying to get to the middle market businesses. So we're really trying to get those businesses that are fast-growing, owner-managed, perhaps really big family businesses, but where the actual CEO and the finance director have a really big role to play in actually driving that business forward. And it's hard to target those businesses through the normal channels or normal media. We've been working with LinkedIn now for over 4 years, and the sponsored updates is one of those products that we really loved. It allowed us to take some of the content that we were doing that we felt that was really interesting and enabled us to push it out there and actually really drill them down and send them down to some very specific targeted customers. And it's really helped us to learn what people will engage with. That's actually helped us then to sort of drive really meaningful content to those businesses that we really want to attract. And it's also helped us to build the brand and actually build what we are good at, which is about connecting businesses around the world. It has driven a huge amount of interaction with Global Connections. So, 40,000 interactions is fantastic. What we also saw, though, was the number of followers increased. We now have 33,000 followers, and for something that's quite niche, which is about international business, that is amazing. And those people are active followers as well, so that for us is the most important thing. The big win for us really with the Sponsored Update programme is us just being able to engage those customers and prospects that we really want to engage and we really believe is our heartland target audience. One of the reasons I love working with LinkedIn is they are a channel to me, and they have a really great opportunity, I think, for us to do more together. We have very like-minded objectives, so I feel that it's a perfect partner for me.